Hi, I'm Santosh here. Hope you're all doing great. I have noticed that many of you are new to trading and looking to start with the basics. So, I have designed this session specifically for beginners to build a solid foundation before moving on to more advanced topics. In this particular slide, I'm focusing on how the entire stock market and its various entities function as per the UK's perspective. As you can see at the top left corner, we have the FCA or the Financial Conduct Authority, which is the regulatory body or entity responsible for ensuring fairness and transparency in the financial markets. Below the FCA, we have the exchanges, namely the London Stock Exchange LSE and the London Metal Exchange LME. The primary role of these exchanges is to execute orders that come from brokers during trading sessions. Clients cannot place orders directly on the exchanges. To participate in the market, clients must first open a trading account with a broker. Brokers plays a crucial role because they handle clients' accounts, including deposits, withdrawals, and client support. They charge brokerage fees for providing these services. Exchanges, on the other hand, focus solely on trade execution and do not deal with client-related services. There are different types of brokers in the market. For example, brokers such as Interactive Brokers, Trading 212 and Plus 500 allow clients to buy and own actual shares. When you place a buy or sell order through these brokers, the order is sent to the exchanges. The exchange then matches it with the counterparty, completes the transaction, and the shares are credited to your trading account. On the other hand, brokers like StarTrader, Vantage, and CMC offer Forex products and CFDs, contract for differences. With CFDs, clients do not own the underlying asset. Instead, they are trading purely on price movements. In this case, their orders are executed through liquidity providers, and the price data feeds are provided by large institutions such as big banks. Some exchanges may provide data feeds to institutions slightly earlier than to retail traders. This can result in clients and retail participants receiving delayed data. The FCA closely monitors such practices to ensure market fairness and transparency. The FCA oversees all these entities, including exchanges, brokers, and liquidity providers, to prevent unfair practices. If clients face any issues, they should first raise a complaint with the respective entity. If the issue is not resolved, they can approach the Financial Ombudsman Service (FOS) and ultimately the FCA will step in and take an appropriate action. In the event of broker insolvency, the Financial Service Compensation Scheme (FSCS) compensates clients up to £85,000, provided the broker is FCA regulated. It is important to note that this compensation covers only your invested capital and does not include trading profits or losses. It is also important to understand that regulations differ from country to country. For example, in India, the regulatory body is SEBI, Securities and Exchange Board of India, whereas the regulatory body in US is SEC, Securities Exchange Commission. While the regulatory authorities differ, the overall structure of the market remains largely similar across regions. In summary, this slide explains how exchanges, brokers, institutions, and regulators interact with each other, how orders are executed, and how regulatory bodies work to ensure fairness and protect investors. To conclude, understanding market structure and regulations is important. However, if you are truly serious about intraday trading, the real edge comes from understanding how institutions actually operate. After years of trading and research, I have developed an intraday trading framework that focuses on how institutions identify real buyers and sellers. Manual traders do not have speed or scale. Our only real hedge is discretionary alpha. In the detailed video linked below, I explain how market structure, market profile, VWAP and order flow dynamics can be used systematically to develop that edge, exactly the way institutions approach the market. If you are genuinely interested in learning institutional style intraday trading, make sure to watch the complete framework on my YouTube channel Unstash by Pepro. The link is in the description. I hope this helps you work towards consistent alpha returns. Thank you.